Hello and welcome back to Zeekism, and I see nothing else to say other than...
Boy, that escalated quickly.
Thank you very much, and yes, it's gotten very serious between, Netflix, Warner Brothers, and Paramount, Discovery, Skydance, whatever you want to... All the players there, as it's being reported that Paramount Skydance is planning to sue Warner Brothers Discovery, seeking financial deals of the Netflix deal. Lots of back and forths over the December period and New Year's after it was sort of reported and announced that Netflix had won the bid to purchase Warner Brothers. And they've sort of been outlining plans about cinematic releases, or lack thereof, let's be honest. And we get into it here via Variety. Here we go. Paramount Skydance's hostile takeover effort of Warner Brothers Discovery has taken a new legal turn. David Ellison's Paramount Skydance on Monday sued Warner Brothers Discovery, seeking to force WBD to disclose the financial details of its $83 billion deal with Netflix. Paramount also officially announced plans to launch a proxy fight for WBD. The company said it will nominate a slate of directors who, in accordance with their fiduciary, that's a nice word, duties, will exercise WBD's right under the Netflix agreement to engage on Paramount's offer and enter into a transaction with Paramount. So they're trying to force it. The litigation also comes after the board of Warner Brothers Discovery rejected Paramount's latest $30 share all-cash bid for WBD in its entirety, the 8th offer put forward by Ellison, with backers including his wealthy father, Larry Ellison. We'll pause there to sort of digest, the background to this. There's clearly a political game going on. Obviously, yes, the film studio is up for grabs. It is clearly for sale. Two chief bidders have come in: one Netflix streaming service, one Paramount, a historically, film studio cinematic release strategy, but is very much pushing a streaming service currently, Paramount Plus. But also, it's very heavily backed by Larry Ellison. It's been widely reported that they have ties or links to the current administration, the presidential administration in America. Netflix, operating out of mostly California, operates in a more, dare I say liberal, but more left-leaning sort of way of looking at things. Again, without putting too fine a point on it, I don't think they're chiefly that way, but it's widely seen as a political hot potato here that's going on in the background to a potential sale. And it's clear that Warner Brothers and Netflix are sort of, they know each other quite well prior to this sale. So there's accusations being put forward here by the Ellison kid here who runs Skydance and now Paramount, that basically, this has been unfairly won. The bid has been unfairly won by Netflix in whatever way you see that way. Anyway, WBD has failed to include any disclosure about how it valued the global network stub equity, how it valued the overall Netflix transaction, how the purchase price reduction for debt works in the Netflix transaction, or even what the basis is for its risk adjustment of our $30 per share all-cash offer. Paramount chairman and CEO David Ellison wrote in an open letter to WBD shareholders on Monday. So this is a couple of days old, so apologies. I've had things to do. Paramount on Monday filed suit in Delaware Chancery Court to ask the court to simply direct WBD to provide this information so that WBD shareholders have what they need to be able to make an informed decision as to whether tender their shares into our offer, Ellison wrote. Asked for comment, Warner Brothers Discovery said Paramount's lawsuit was meritless and pointed out that Paramount has yet to raise the price of its acquisition offer above $30 a share. So they're basically saying that they wanted Paramount, alluding to the fact that Paramount needed to raise the price, but this is their 8th offer. So one wonders why Netflix were able to come in. Anyway, Paramount Skydance's complaint names WBD CEO David Zaslav and the other members of WBD's board as defendants, alleging they breached their disclosure duties by failing to provide full, accurate and truthful information. A copy of the suit is available at this link. While the board's conduct to date raises serious concerns and gives rise to various categories of fiduciary duty claims, Paramount brings this limited action now, seeking only disclosure of targeted material information while reserving the right to seek further relief as appropriate. Paramount Skydance's lawsuit says it does so because right now WBD stockholders have an immediate need for the material information being withheld in order to make a decision on Paramount's tender offer to them. Meanwhile, ahead of the Warner Bros. Discovery's 2026 shareholder meeting, in addition to nominating its own candidates for the WBD Board of Directors, Paramount will propose an amendment to WBD's bylaws to require WBD shareholder approval for any separation of global networks. If WBD calls a special meeting ahead of its annual meeting to vote on the Netflix agreement, which is widely assumed that's what they're going to do, Paramount will solicit proxies against such approval, according to David Ellison's open letter. So this feels like strong arm tactics here now. According to Paramount's analysis, the total value of the Netflix transaction to WBD shareholders currently implies that shares in the proposed Discovery Global spin-off are worthless under the Netflix deal. Under Netflix's agreement with WBD, the streaming giant would pay $27.75 per share for Warner Brothers films and TV studio business, so basically undercutting what Paramount is offering on the table at $30 is their argument. So why would they be going for a cheaper option? One wonders. Share for Warner Brothers films and TV studio businesses, HBO and HBO Max, and the games division, which is, it's worth quite a pop that one alone. This transaction would be completed after WBD's spin-off in the third quarter of 2026 of Discovery Global, which is set to include CNN, TBS, HGTV, Food Network, and Discovery Plus. So only one of those, I think, is something worth paying attention to. We do not undertake any of these actions lightly, Ellison wrote in the letter to WBD shareholders. Make no mistake, our goal remains to have constructive discussions with WBD's board to reach an agreement that is in the best interests of WBD shareholders. We remain perplexed that WBD never responded to our December the 4th offer, never attempted to clarify or negotiate any of the terms in that proposal, nor traded markups of contracts with us, which is interesting, to be fair. WBD has provided increasingly novel reasons for avoiding a transaction with Paramount. For what it has never said, because it cannot, is that the Netflix transaction is financially superior to our actual offer, Ellison wrote, because they're alleging that they can't do that because they're saying that their offer is not as much as ours, but they've picked Netflix anyway, and what would the reasons potentially be for that? So there's a lot to digest there. We'll pause and we'll discuss the Paramount of it all. It's really difficult to have an opinion one way or the other than as a film fan predominantly. TV is TV. I don't think that's necessarily changed with the business model of streaming. It's more where the films are concerned that sort of me as a fan comes into it and goes, well, here you've got Paramount, of course, now supported by Skydance or financed by Skydance. They've merged, so they're the same company now. A media global conglomerate. They are advertising or saying cinematic. They believe in cinema, which I am a big fan of cinemas in general. I think it's still the best way to watch a film personally, especially a good one. And this is the company proposing it. However, their method of sale and the sort of uneasiness of some of their behaviours since certainly Skydance have been on the scene over the last year or two. We only have to look at the South Park guys for what it's worth, the Colbert stuff. And their ties to a political administration currently doesn't sit well. In a corporate landscape, it doesn't sit well. However, we are in the realm of saying, well, are we backing Netflix in that case? Because Netflix are a massive conglomerate, a massive company with ties all over the world. And obviously, I think the largest streaming service in the world. And they are not a fan of cinemas. They really aren't. Their whole business model is to kill them and make sure everyone's watching their phones, devices, or televisions for everything, for all their entertainment. I mean, look at their games they've now got on the service, which you sort of I've played a couple of them and gone, oh, okay, that's fine. It doesn't really work necessarily, but again, they're a competitive bunch on Netflix, and they've got all the capital behind them to do whatever they want, so they're flexing. So do you pick a side in this regard? Well, it's really hard to. And then we've got this here from the Financial Times, believe it or not an outlet that I usually have on the channel, but for this purpose they Netflix is preparing an all-cash offer for Warner Brothers to fend off Paramount. So whether that's a raised price, they've just the same equitable value of $83 billion, just in an all-cash offer, because they can. Netflix is preparing to amend the terms of its nearly $83 billion deal to buy Warner Brothers, Discovery, to make it an all-cash offer in order to fend off Paramount's hostile bid and speed up the acquisition's closure. I think both bids are probably described as a hostile bid, but that's just me speculating. Revising the terms of the deal is aimed at offering WBD shareholders a quicker and simpler transaction. People familiar with the matter said the refreshed deal is still under discussion and plans could change, the people warned. Shares in WBD rose 1.6% on Tuesday after Bloomberg News reported that Netflix could revise the deal terms, suggesting the move was favoured by WBD's investors, some of which are clearly in leagues with Netflix. They've picked their winner, basically, and they now need to convince shareholders, but I'm not necessarily sure they have to convince shareholders in order to do a sale. I think they might just do a sale anyway, but they can't mislead shareholders, I think, is the rules and regulations there when it comes to trading on the stock market and all that sort of stuff. Representatives for Netflix and Warner did not respond to requests for comment. Paramount declined to comment as well, because why would they? Netflix's original deal, which was agreed in early December, valued WBD's studio and streaming assets at $27.75 a share, or an enterprise value of $82.7 billion, of which $4.50 would be paid in Netflix's stock. I don't understand that phrase. $4.50. Okay. I'm sure it makes sense. Almost immediately after Netflix struck its deal, Paramount took its $108 billion bid for the entirety of WBD, including its cable division, behind CNN, directly to shareholders, and has managed to win some support on the merits of WBD returning to the negotiating table. Pentwater Capital Management, WBD's seventh largest shareholder, threatened to vote down the Netflix deal last week if WBD failed to re-engage with Paramount if it sweetens its bid. Paramount offered to buy the whole of WBD for $30 a share in cash. The media group run by David Ellison on Monday threatened to launch a proxy fight to overhaul WBD's board and sued the company to force it to disclose financial information behind its decision to opt for Netflix's deal. It is curious, because if Netflix have clearly offered a lower deal, what is the rationale for them picking Netflix? Would be the argument, and that's where it's going to get into muddy waters if this ends up in court, which is entirely possible. If there's big money on the line, then we are seeing the start of a saga, basically. I mean, it's probably already a saga, to be honest. As part of its lawsuit, Paramount said it wanted greater transparency about WBD's valuation of its cable TV division, known as Global Networks, which will be spun off as part of the Netflix deal, and how the deal shifted debt between the divisions. Yeah, it's curious what they do with those TV networks. I mean, the content, yes, and the studios that make the content, but they're not going to broadcast channels through Netflix, clearly. And there's no value for them in, I would imagine, CNN or anything like that. So they might sell those off, potentially. I'm not sure. Since Netflix's pursuit of WBD was made public in October, the streaming group has lost more than a quarter of its value. Netflix's shares jumped slightly on the news on Tuesday, closing up 1%. That's curious. Not that Netflix cares, because they've got all the sway, all the power, and all the money in the world to sort of do whatever they want. They've got clearly ties with the existing board of WBD. Where this ends up, I don't know. I'm still not ruling out Paramount. They're clearly well backed. They're clearly well funded, and clearly, if they're offering a higher value, especially for shareholders, if they've got shareholder support, that's quite strong. It would take some to go against shareholder approval, especially if they're going to hit them in the pocket. If shareholders, and I went through a little bit like this when WWE was sold/given to TKO, the justification for it, or why that was allowed, was because the shareholders would be receiving more in terms of return if it was as part of a TKO conglomeration group than it would be if they had taken a Saudi bid, for example. You've got a big company in TKO becoming even bigger if they were to merge and become this conglomerate, and that's how they justified it to shareholders. And I guess the fiduciary systems that operate the stock market in America. How that's turned out is, that's for us to discuss. But nevertheless, here we've got a case where Paramount have put in a bid that's substantially more than Netflix, but Netflix has won out. And why is that? They've got to explain that to shareholders, because otherwise they can lodge lodge legal complaints. They could sue Warner Brothers Discovery as a result of accepting a lesser bid. Therefore, their share price is lesser than it would have been had you not accepted the higher bid. So it's curious. It's an interesting dilemma or a saga that's playing out in front of our eyes, and they're doing it through the media because that's sort of how you gain leverage, support from shareholders, acknowledgement that what's going on is going on. Where this ends up, I do not know. It'll be a curious thing to watch. I think I've covered everything related to the update because I covered a bit before Christmas. But it is curious. Yeah. And Warner Brothers is such a recognizable brand. It'll be... Personally, I don't want to say I hope it ends up with Paramount, because even then I'm like, well, I'm not sure I want lesser studios, because basically whatever happens here, it means less jobs for people in the industry. It probably means less creative outlets for artists to make, to write, to produce content. Maybe there's an argument there should be less content. That's an argument we can have, or discussion we can have. But for now, I think you're looking at a case where we're losing one of the recognizable, iconic brands of film and television for at least 100 years. American institution, whatever you want to call it. It's a big deal. It's a big deal that it's being fought over in this regard. I still personally would like to see a private company take over Warner Brothers and run it properly as a studio. Although we've just come off the back of a 2025 where Warner Brothers has done quite well in the box office. So it's not to say that it's being run poorly. It's just up for sale, and I think that was always the MO of Discovery when they came in and got it. And that's just not my opinion. I think that's been confirmed by more senior and wiser sources than myself. But it is interesting to see it play out. And my personal preference would be neither of these goobers to get it, and it would be run properly as a studio, and we would continue the legacy of Warner Brothers, because they have made responsible for some massively important contributions to cinema, and that's sort of where I come from, is the cinematic point of view. I love going to the cinema. Not everyone does, granted, especially lesser nowadays with the rise of streaming and devices that can play films and TV and stuff like that. But for my money, I prefer going to the cinema, and I do believe with this we are, this deal in particular, I do think it furthers the destruction of cinemas, the lesser importance of cinemas. If Netflix gets it, of course, they don't give a monkeys about cinemas. They would quite happily see them all burn down and replace with Netflix museums. Why not? It's the rise of streaming. This was always a possibility. Once they got big enough, they would start to flex their muscles and buy recognizable film studios and have them curtailed to them. I'm not necessarily championing Disney either, but at least they prop up the cinema box office. So, as do Warner Brothers, which is one of the biggest shames of this. Anyway, I'll stop rambling and ranting. Let me know what you think about this. Do you have a side? Do you care? Do you even pick a side in this? I don't think either of them are quite, it's not like a tribalism thing. You're like, go Paramount, go Netflix, Team Netflix. No, I'm neither, to be honest. I think whoever wins here, we lose. That's my gut. In some way, we all lose. But let me know what you think in the comment section below. Please leave a like or subscribe on the channel as well. Thank you very much for watching, listening, and I'll speak to you next time. Thank you. Bye bye.